Hi, welcome back to NDTV Profit. Now, in the previous video, we were discussing what exactly is fiscal deficit, and I explained then it is the total revenue of the country minus the total expenditure of the country. Now, let's try and understand this revenue and expenditure bit. Where exactly is the money for the government coming in from? Well, the short answer of it is you. Essentially, there are certain levels of certain areas through which the government earns its revenue, the first of which is taxes. So income tax that the government deducts from your income, and GST, which it levies on various goods and services across the country, are points of tax revenue for the government. This ensures that the government has enough money to go out and do spending. Some of the other areas of income for the government is interest on loans that it extends to states or other public sector companies. It also earns fees and dividends and profit from public sector companies. Essentially, this is a portion of the profit that the company pays to the government because the government is the largest shareholder of the company. There are other revenue sources as well which you need to look at, which is any non-debt capital receipts. So anything that is not linked to a loan but is capital that is given out by the government in the form of loans extended by the government or disinvestments it conducts through the year. So if the government goes out and sells its stake in a public sector unit, that's considered a disinvestment. So in short, there's tax revenue and non-tax revenue. Tax revenue is stuff that you understand, which is income tax and GST, fees, dividend income, profit, interest on loans as well as loan recoveries, and finally disinvestments by the government in public sector companies.